Hello guys, I welcome you all to today's video, and I'm really happy to be here again because I saw so many screenshots from my subscribers. They made amazing profits yesterday and I'm really happy about that. Okay guys, so many questions have been popping up on my DM asking me how to generate their signals on their own. Of course, I know most of these questions are coming from those that are not having the 3M trend milker indicator, but this is also an idea. I mean, it is also a way of understanding how to trade. Okay, and of course this is a unique way to go about it, so I've decided to come up with something very simple which we all can learn from. Okay, which we all can learn from, and that is why I am looking at the topic best forex candle patterns for trading boom and crash. Okay, best forex candle patterns for trading boom and crash. We'll be checking out different candle patterns, and of course I will be dropping the patterns in the Telegram channel. For those that are on the Telegram channel, you can go there and download it right from there. Okay, so this is very important. Okay, with that being said, before I go fully into it, in case you are joining us for the first time, I welcome you all to Qora Digital Cash. This is a platform which I used to share with you my ideas on how you can make some cool cash for yourself online, most especially within the forex niche. All you need to do is just to take some time to browse through the channel, watch my training videos, and of course guys, make sure you practice and perfect your trading skill first on your demo account before trying them out on your real account. And if you love my videos, can you give me a thumbs up and share with families and friends? And if you are yet to subscribe to this channel, kindly do so right away so that you can be notified whenever I upload a training video like this. So quickly, let's go straight into what we have right here, checking out the candle patterns, and of course, and see how we can put them into use. Okay, but first guys, with that being said, this are also the three major things that are very important. Okay, your trend is always very important. If you don't know how to identify your trend, that is why the 3M trend milker trading indicator is there for you to also help you to understand, identify your entry point. You can see right from here. Okay, if you are having this trading tool, then you should have been milking the market right from this support zone. You can see it right here. It was on downtrend before. This is crash 500. Right from this support zone, it started going up and up. It went straight on uptrend. Okay, you can see this guys, you can see this, and right now it's trying to go back on downtrend. At the moment, we've gotten our sell signal, just waiting for our red flag to show up. Okay, once it is showing, then definitely we should know that this is going fully on downtrend. So when you understand the aspect of trend trading, then you will know how to milk the market successfully. But we are not focusing more on the chart this time around. We want to understand the chart trading and how you yourself can identify your signal without any hiccups, and this can help you to have a better knowledge about the market. Okay, while I'm trying to prepare for this training session, I came up with one of my material, and I saw that I still have some things that are still relevant for you. Okay, so I decided to bring it up and make it, I think that will make it a bit simpler for you guys to understand. So I'm going to be bringing up the image right away. Okay guys, this is the image. It is called the patterns cheat sheets. Okay, I will be showing you the different patterns, and of course I will also use it to explain to you what you should do whenever you see such patterns are appearing or showing up. And this works on all trading assets. Okay, it also works on on all time frame. Okay, so preferably if you are on probably 1 hour time frame, even if you don't want to go to daily, and you are seeing any of this pattern, then you should know that you are ready to trade for a very long time. You heard that right. Okay, if you are on 1 hour time frame, if you don't want to go further than there, you want to get your signal quickly with either 30 minutes or 1 hour time frame, and you still want to trade for a very long time, once you see any of these patterns showing up, just wait for it to happen and you will be able to milk the market successfully for a very long time. Okay, so that is it. So I'm going to zoom it up right now. I'm going to zoom it out so that you guys can see what I have here, so that we can do the analysis together. Okay, I will use this patterns cheat chart, cheat sheet to do our to explain further on how to go about it. Okay, so let me zoom it out a bit again so that we see it clearly. Okay guys, okay, this is it. Okay, this is the first one. Okay, these are real candle charts. If you should check your charts very well, either you are trading fiat currency, you are trading synthetic indices, you are trading stocks or the likes. Okay, these, even crypto guys, these are the the patterns that the candles usually form, and whenever you see any of this pattern, then this is what should be at the back of your mind. It is an opportunity for you to go into the market and make a lot of profit for yourself. So I will be dropping these charts in the Telegram channel, and of course you can go over there and download from there. Okay, so if you're not on the Telegram channel, you can join the Telegram channel so that you can have access to these. Okay, that is the essence of you joining the Telegram channel. So now let's go over it one after the other. Okay, this is the first one. It is called the falling wedge. Okay, the falling wedge usually take this form. You can see the market was on downtrend before, but when it got to this support zone, it pulled back up. Okay, when it pulled back up, wait, let me bring this down so that we get to see it properly. Okay, I still have a feeling that we are not seeing it properly. Okay, so when it pulled back, it got to this resistance zone, was unable to break out above this resistance zone, so it still went back on downtrend and got to the same support zone again. You can see it right here. Okay, even though it went a little bit lower than the other one, they are still on the same parallel line. Okay, so it went back up again, but it didn't get to the exact place where this one got to. But if you should draw your trend line, it's still going to the edge of, this edge and this edge will still meet each other, and of course went back down again and got to that same support zone, still unable to break out from there. Then once that has happened, you can just draw your horizontal line like this and also draw this next one. So once the third one 8 days and went back up, if this breakout, if it breaks out, what you are just waiting for is the breakout above. If the breakout happens above, you know it was on downtrend before. Okay, so if the breakout happened above, just allow the candle to close. After closing, it might want to pull back a bit. Okay, it might want to, you can see that it has broken out of the trying to create another resistance zone, so it might want to pull back a bit. Then of course after the pullback and it didn't go below this, then you can go fully into it. Okay, now where is going to be your entry point? Okay, after creating the first bullish candle right here, once it has closed it, then you can go into it and buy right from there, from the second candle. Okay, you can go in and buy right from there, but you can now put your stop loss somewhere below that candle. Okay, you can put your stop loss somewhere below this candle. Okay, so so in case it comes back, then definitely to hit your stop loss, it won't go too far before it will get to your stop loss. But if it does not and goes in our direction, then you're going to make a lot of profit. So you can see how profitable this can be. So if you are on 1 hour time frame, which means you will be making about 2, 3, 4 our trade right from here. Okay, so you can do your calculations right from there. So that is falling wedge. You can see that it is falling, okay, going down and narrowing down around there. This place is wide while this place is narrowed down. Okay, so that is it. Then this is like the opposite of it. It is called symmetrical candle. Okay, symmetrical candle, it was coming from a bullish trend before, and of course got to this resistance or pull back, went back up again, pull back, and of course it's now broke out above the resistance zone. This usually happen when there is a breakout above the resistance zone. Actually, we were expecting it to break out below the support zone, but it didn't happen, so it's now break out above the resistance zone. So right from there, it means that there will be a bullish trend. I told you before that once there is a breakout, then definitely you should know that the market is going to go in that direction for a very long time. So of course, you still know where to put your stop loss, and of course your entry points. Once the last candle, this candle has closed, then you come in while this one is being created. Okay, so you can make a lot of profit right from there. So let's see more, guys. Let's see more. Okay, let's see more. Why did it go down? Okay, so now let's see all these we are still discussing about bullish pattern. Okay, we are discussing about the bullish pattern first, then thereafter we will be discussing about the bearish pattern. Okay, now with this we have bullish rectangle, bullish rectangle. This is bullish rectangle. This is coming from a bullish trend, okay, but got to this resistance and was unable to break out from there. We've noticed this several times whenever I'm doing my analysis. This usually happens more, okay, when the market will be ranging within the resistance zone and the support zone. Okay, you must have noticed it several times. This is very we should be familiar to this kind of pattern. Okay, it will get to this resistance zone, pull back, and of course still went back up, still came back again, and once it breaks out above the resistance zone, then definitely the next bullish candle that is opening should be our entry point, and this horizontal line should be our stop loss. Okay, so this should be our entry point, our stop loss should be this, then we can make as much profit as possible right from there. Okay, now let's see the last set of the bullish pattern. Okay, inverse head and shoulder. Okay, inverse head and shoulder. You can see this pattern below here. You can see that this was coming from a bearish candle, got to this region, pull back to it, got to this resistance zone, was unable to go through, and of course came back again, but this time around it went a bit ahead, or a bit deeper than this. Okay, so then going down again and got to that same region where it got to the first time. Okay, this is a shoulder, this is a shoulder, and this is the head. Okay, but this time around is like turning it upside down. Okay, trying to somersault. Okay, that is what is trying to happen right here. So once this goes back up and it goes beyond this resistance zone, then definitely you should have your entry point on the next bullish candle. Okay, your next entry point, and your stop loss should be on this horizontal line. Okay, just the way you have seen it right from here. You guys must have seen a pattern like this also, but in most cases we are familiar with the head and shoulder pattern. Okay, but this is the inverse version of it. Okay, so when you notice all this, then you should understand that that is what should happen next. Okay, so this is another bullish candle pattern. Okay, this is called cup and handle. Okay, you can see this from here. It was on bullish trend, got to this region, pull back, went back up again, pull back, went back up again. You can see this didn't form head and shoulder fully, then of course got to this region, then played around there for a while. You can see it playing around there for a while. So this had actually formed a cup, and of course now trying to form a the handle right from here, because it's just gave us a little short movement around there before breaking out of the resistance zone somewhere here. So the horizontal line will still remain as your stop loss, and of course the next bullish candle should be your entry point. Okay, so that is it. That is how you understand the charts. Okay, when you understand this chart alone, then you will be able to make some good profit and make some reasonable decision whenever you are trading. Okay, this is another one. This is ascending triangle. Okay, ascending triangle is in this form. Okay, this is going into a bullish pattern, got to this resistance zone, was unable to pull through, and of course came back, went back up again, came back again, but didn't get to the initial place. Okay, and of course went back up, still came back, and of course this time around now broke out above it. So this is on a parallel line, and of course this is slanting towards it, so it is being narrowed down right here. So it shows that it is an ascending triangle trying to break out above this resistance zone, but doing it gradually until it was able to break out from there. So we have our entry point right from here, and of course the stop loss is on the horizontal line. So that is it. Now let's look at more. Okay, this time around let's focus more on the what's it called, on the bearish pattern. Okay, on the bearish pattern. So I want you to go over these over and over. Probably every morning you look at the charts, try to identify the chart and see the patterns that you can identify on the charts using this chart sheet. So that you will understand how to identify some of this, so that you will get used to it, you will get used to the pattern, and each time you see this pattern you will be able to identify them and also know the right thing to do at that point. Okay, this is head and shoulder. Okay, this is head and shoulder. You can see it right here. You can see the head, you can see the shoulder, you can see the shoulder. It was from a bullish trend, but it was unable to go beyond this resistance zone, so it created the shoulder here and another shoulder here, and this is the head. So which means the next one should break out below this support zone, and once that happens you allow this candle to close and wait for your entry point. Okay, so this is your entry point when this is being created. Okay, and you sell at that particular point, and this is going to go for long also. Then we also have inverted flag. Okay, inverted flag. This is coming from a bearish movement, and of course got to this movement, got to this support zone, pull back, got back there again, but a little bit higher than this, and of course pull back, and of course got back there. This time around now broke out from there. So once it breaks out, then definitely you should come in around here, and your stop loss should be at the tip of this particular line. Okay, so this should be your entry point, and of course you can keep on trading that way because it has broken out from the resistance, from the support zone. Okay, so that is it. So right here is a descending triangle, which is the opposite of the ascending triangle. So let me bring it up again. So a descending triangle, you can see forming a bearish movement, and of course pull back and still coming back to that same support zone, but eventually it broke out around here. You can see the tip right here is being narrowed down while this place is wild. So gradually it is trying to break out below this support zone till it was able to do so. So this should be your entry point, guys, and your stop loss should be somewhere here. Okay, so now let's look at the last set of the bearish pattern. Okay, so we have a rising wedge. Okay, this is a rising wedge, which is the opposite of the falling wedge. Okay, so I'll write from a bullish pattern, from a bullish trend, and of course got to this resistance zone, pull back, got back here again, pull back, and got back here again, and of course at this stage came down below the support zone instead of breaking out above the resistance zone. So it came down below the support zone, and of course guys, once this happened, you just come in on the next bearish candle. Okay, so that is it. So you come in and set your stop loss at the tip of this trend line. Okay, so that is it. Then we have a symmetrical triangle. Okay, from a bearish pattern, got to this region, pull back, and of course got back here, pull back again, got back here, and right here it broke out below it. And of course you can see your entry points and your stop loss should be somewhere here. Now let's see the final one, which is a bearish rectangle. Okay, a bearish rectangle, we are also familiar with this. This is coming from a bearish pattern, got to this region, pull back, and of course got here, pull back, and once it breaks out below the support zone, then here should be your entry point, and you start selling right from there. So these are different candle patterns which you can use to do your analysis on the chart. All you just need to do is just to make sure you understand every part of it, get used to it, and of course you can try to identify them on your chart, try to get used to it. The best way you can get used to it is you going through it every day. You go through it every day until you are able to identify them on the chart. Okay, so once you are able to identify them on the chart, then you are good with that. Okay, so with this you can easily make some good profit for yourself, even if you are not having any trading tools, okay, with you. So that is that. I will be stopping right here. Remember, this is coming to you courtesy Qora Digital Cash, and if you have any question at all, feel free to contact me. My contact details are in the description box below this video, and if you are yet to subscribe to this channel, kindly do so right away so that you can be notified whenever I upload a training video like this. Watch out for my next video. Until then, God bless you.